Assalamualaikum warahmatullahi wabarakatuh. Alhamdulillah wassalatu wassalamu ala Rasulillah wa ali wa man wala. Bismillah syafi, bismillah muafi, bismillahilladzi la yadurru ma'a ismihi syai'un fil ardi wa la fis samai wa samiul alim. Our next discussion is about tax planning. What is tax planning is all about is that in your wealth planning you have to what we call this to fulfill your obligation of paying tax. So you have to plan your tax so that you can minimize on the tax expenses as much as you could by following all the statutory allowance on tax deduction, on tax exemptions, and on several allocation that's given by the inland revenue. As you know that you must somehow or other understand what will be the tax system, and this tax system in Malaysia is well structured and it has been well organized by the system, whereby you have to follow the system in order to know the amount of tax that is payable. In Islam, however, we have some criteria for a good tax system. Number one, it has to be something that is very certain. The principle of certainty. As far as our tax system is concerned in Malaysia, we are very certain about the tax amount to be paid and what will be the amounts of exemptions given, the amount of rebates, and all kind of allowances that is very certain in our tax payment system. There is something that is very certain, and there is no such thing as arbitrary here in the tax system. Number two, it must be with the principle of fairness, a fair system. The attributes of the fair system is that all transactions should be treated fairly for tax purposes. As far as we are concerned, in our tax system in Malaysia, it is considered as a fair system. It has the rate of tax amount to be paid depending on your level of profits or income generated by you or by your company. And number three, it should be efficient. Principle of efficiency. The tax system should be able to generate the amount of revenue required by the government. As far as Malaysia is concerned, the tax system is very, very efficient. Perhaps if you have the rebate is done almost in a very short period of time, almost immediately. Number three, it has a low compliance cost. Tax law should be simple so that compliance costs can be small. Malaysia have introduced online system, and we have the system that is applicable online. So this system is very, very efficient, and this system involves a very low cost, whereby you can upload all the necessary documents, and the tax or the inland revenue will immediately estimate your tax and will somehow or other will let you know almost immediately. Number five, the principle of flexibility. The tax system can be very quickly to have an immediate impact and to achieve other economic objectives. It should have a very flexible system. For example, we have introduced GST, we have introduced SST, and few other tax systems, and this system somehow or other is very flexible depending on the economic condition of the country. As far as the tax rate is concerned, we have a system whereby the tax rate will be based on certain bracket of your income. And it can have a range of tax to be paid by individual and also by company. And also the tax system is made compulsory to residents and as well as non-residents, and also made compulsory to individuals who live in Malaysia as well as outside Malaysia. So the system have spelled out the process and also will determine the rates of tax that is applicable to individuals as well as to company. As far as we're concerned, there are few laws related to personal and business tax. Business income is taxed under Section 4A of ITA. And or Income Tax Act. Employment income is taxed under Section 4B of ITA or Income Tax Act. And this law provided a very clear power to the inland revenue and also spell out the obligations of individuals as well as to businesses to comply with the income tax system. As far the tax planning strategies, we must remember that there is amount of taxable income, and this amount of taxable income, however, there are allowances for them to be reduced on the amount based on what has been stated by the law. For example, for the corporation, for example, the taxable amount can be reduced because of treatment of losses. There are also capital allowances, and also taxable amount will be different based on a partnership business. And a taxable amount also can be deferred because of partners adjusted income. And there is also allowance of capital, allocation of capital allowance. And this allocation of capital allowances allow for you to have your taxable income to be reduced based on the allowance given. And these deductible expenses is based on what have been described by the Act. And the Acts have a principle of deduction, and there are things that are allowable to be deducted, and there are things are not allowable or prohibited under the Act. And similarly, the Act also try to avoid double deductions. So, in order for us to manage our tax payment, we look all the amount that is allowable for deduction, and also we look about the amount that is what we call as allowable expenses or deductible expenses. And as far the company is concerned, the company also have to plan about the corporate tax planning strategies. Consists of treatment of available losses, treatment of capital allowances, trade debts taken over in a merger or restructuring exercise, and treatment on the valuation of stock on transfer of stock on cessation, or cross-charging for services rendered, transfer of profitable business into companies with business losses. These are all the tax planning strategies that can be done by corporate. So a firm can have these strategies in order for them to reduce the tax payment and benefit from their transaction based on the allowable expenses in the Act. So tax is compulsory to those who have certain level of income and they achieve that level of income after the deduction of allowable expenses, and these allowable expenses are spelled out clearly in the Act. Having to know that tax is compulsory to those who has taxable income, that is income, their income minus the allowable expenses, and this taxable income, they are compulsory, obligatory to pay the tax. Fail to do so, they will be given a heavy penalty by the Inland Revenue Act on the behalf of the government. For further reading, you can look at the notes and all the guidelines that is spelled out clearly. We'll see you in the next discussion, inshallah. Assalamualaikum warahmatullahi.